And welcome. I'm Alison Pepperell and I co-chair the Institute of Risk Management's Charities Special Interest Group, which is a bit of a mouthful. Hello. I'm just going to, there we go. We've got a very quick agenda today, which is just basically some welcome introductions, a little bit about the Special Interest Group, then on to the main part of the presentation, Resilience Reimagined, courtesy of David and Rick. And we'll finish up with questions and answers. By all means, pop them in the questions tab that hopefully everybody can see. I can see it. So if I can, on the basis I'm not very good technically, I'm thinking everybody can. So as I said, I'm Alison Pepperell. I co-chair the IRM SIG alongside Paula Carlson-Brown. We're a relatively small SIG committee of 8 members. We provide events. We're trying to do one a month now. Steph Jackson is our events lead, and some of you may have joined us last month where we just had a members catch up. We're kind of interspersing those with events like today, which are more thought leadership focused. You can see on the screen our 2 most recent publications. The Introduction to Emerging Risks and How to Identify Them is about to be followed up by 2 further publications on tackling emerging risks and embedding / how to have the conversation with your leadership. These are all written specifically for charities, very much for the sector, by the sector. We also have a closed LinkedIn group, which if anyone wants to join, drop me a line because you have to be approved to join the group. And the intention behind that is to give people from the sector a kind of safe place to ask each other questions. The IRM itself, as you probably all know, is the leading enterprise risk management professional body for members and also for non-members to access thought leadership, qualifications, research, publications, and there are a number of special interest groups and indeed regional groups. So without further ado, I will just introduce Rick and David, and thank you very much for joining us. I have to say, when I read the publication that you're going to talk about, which is has gone out to all of the attendees, it was a bit like a eureka moment for me. I was really surprised how something headed Resilience Reimagined made me think again about how risk was managed. I don't know if that was your intention, but that certainly did occur to me. And just to introduce Rick, I'm going to read this. Rick is a partner at Deloitte and a senior risk professional with over 30 years experience in strategic risk, organisational resilience and crisis management. He operates at board and executive level, bringing pragmatic and practical experience in dealing with high impact events and change programme. David is a leading authority on organisational resilience and leading change, with over 20 years experience gained in academia, industry and consultancy. He is Professor of Leadership and Organisational Change and Commercial Director at Cranfield School of Management and leads the Cranfield University Multidisciplinary Resilience Grand Challenge. I asked them to talk today after reading Resilience Reimagined, and I do strongly recommend that each of you reads it. It's a fantastic and relatively easy read. So honestly, I really mean that. And now I'll pass on.
Hey, Alison, thank you. Thanks for the introduction. I'm Rick, and good to speak to you all this afternoon. I thought I'd just spend a few minutes giving a little bit of background to the term Resilience Reimagined and also the report. And then David will talk through the report itself as the main author of the report. Let me just start. I guess, you know, as we were going through COVID-19 this time last year, I was increasingly starting to look at, what's that going to mean for organizations in the future, and in particular, what's it going to mean in terms of resilience. And I was talking to many clients, and I think they were putting resilience very clearly as a strategic issue, perhaps for the future for them. But when I asked them, what do you mean by resilience then? I got a lot of very different answers. Sometimes, actually, that's a good question. I don't know what I mean by it, but sometimes, quite variable answers as to what resilience is. And even more difficult, I think the people I talked to found it to put resilience in the context of their organization. So what does resilience, not just what does resilience mean, but what does it mean to you and your organization? So as Deloitte, we launched back in September 2020 a campaign we called Resilience Reimagined. And the aim of that campaign was to bring a bit more clarity of thought to around what resilience means and what it means for an organization. We put out some initial papers and thoughts around that back in September and through October, November last year. During October, November, the National Preparedness Commission also came into being, and that's chaired by Lord Toby Harris, and has a number of eminent people on the commission. And Toby was very interested in commissioning various research papers, and one in particular he was interested in was for aimed at organizations. And in talking to him, we suggested that as Deloitte, we could support that sort of commissioning of the paper, and recommended that Professor David Denyer from Cranfield actually conducts the research and authors the report on behalf of the Preparedness Commission. So that's the sort of background to how the report sort of started. So it's been commissioned by the National Preparedness Commission, supported by Deloitte, and it's been developed, researched and written by David Denyer and his colleague Mike Sutcliffe from Cranfield. Now, the objectives of the report were to firstly look at some of the lessons we might be able to draw from the financial services sector following the financial crisis, and the activities and the steps they took to strengthen financial resilience post the financial crisis. What can we learn from that? It was also to then look and hear, speak to and hear from leaders in various industries on what they've learned and their experience of dealing with COVID-19. So we could build that in as well. And in addition to that, it builds on research that's previously been done across Cranfield University, and in particular, of course, by David in earlier papers. So the research, as I said, was conducted by David and Mike Sutcliffe from Cranfield. It was conducted through November 2020 through to January 2021. Had quite a lot of inputs, but in particular, a number of one-to-one conversations that David had with over 50 different contributors from across a whole range of different industries and sectors. And you'll see there the list at the bottom, the last bullet point on the right. I think just before I hand to David, the one thing I would say, I think it is a good report. I would say that, of course, having been involved, but it has aimed to give a more practical guide to what organizational resilience is and how to go about improving and building organizational resilience in what I would say in a systematic way. And then doing so, it set out 7 practices, and it sets out a new model for organizational resilience. And it touches on a means to measure progress towards that sort of journey to building stronger resilience. So that's the quick introduction and summary of how we got to the report. And I'll pass to David to perhaps chat through a bit more detail of what's actually in the report. Okay, David.
Yeah, thanks, Rick. I'm going to have to do my very best Chris Whitty impersonation and ask for the next slide when I'm at that point here. So yeah, a couple of things to say before I really get into the 7 practices, and also pick up on a couple of elements of the report that I think are particularly interesting and useful, is to also say something about this Resilience Reimagined idea, that was introduced earlier by Alison. I think there's two elements to this reimagined element to it, to be honest with you. And I think the first element is that for many years we've done risk management, we've done business continuity, we've done disaster recovery. And I think there's always been some questions around what else is there and are we missing any elements to that? And I think what we've produced here questions a little bit of some of the underlying assumptions about sort of more traditional ways of thinking about responding to disruptive events. And I'm going to draw out a couple of those things that I think are really different as we go through this. I think the second element of this reimagined piece is drawn from some of the literature, and actually one of my favorite writers on this stuff, a guy called Carl Weick, who said that a disaster is always a failure of imagination. And what he meant by that is that for many people and many organizations that get disrupted by events, whatever those events might be, they very rarely imagine that it can happen to them. They always think it's happening somewhere else, or they are different in some way. And I think that we can kind of relate to that when we think about many organizations' response to COVID, and how many organizations actually thought it was going to impact them. Did we imagine it would happen? And if we can't imagine that it's going to happen, then we're very unlikely to prepare for those types of events. I think the real challenge with that is that COVID-19 and pandemic have been atop the National Risk Register as the highest probability and highest consequence events since the National Risk Register's inception in 2008. So why is it then that we are not preparing better for disruptive events? And that's one of the questions we were trying to address. And what more is there over and above the normal risk management, business continuity, crisis and disaster response? So yeah, next slide, please. The 7 practices that we identified, as Rick said, come out of our interviews and focus groups with senior business leaders across different sectors. And what we were trying to do was tease out what were the difference makers, what were the things that really seemed to be making a difference in terms of how they were approaching resilience. And these 7 really came out of the research as things that they did that may be a bit different to some of the other organizations that we think have got a lower level of maturity in terms of resilience. Now, the number one thing, and I think this really underpins the culture and the culture of leadership around those more resilient organizations, was that there was an underpinning notion that they were willing to discuss future failure. They were often asking within the organization, within conversations, what if and what next? They were questioning the sustainability of the organization. They were asking questions about what might interrupt us, what might disrupt us, what do we face now and in the future? And they actually encouraged people to think with that failure mode. So what we saw in a lot of organizations were practical activities like conducting pre-mortems as a matter of routine in the organization. So a pre-mortem different to a post-mortem. Post-mortem, after the event, we look back and say, why does it happen? Pre-mortem is that we put ourselves in the future, and perhaps when we're introducing a new initiative, a new idea, a new project, and say, now let's imagine that that has failed. What do we do? And in doing that exercise, really start to understand how it might fail. And what I think we see in many organizations is an overemphasis on success, often past success, and less of an emphasis on future failure. And I think as a leadership concept, if leaders are only looking at the success cases and the good news stories and not the bad news stories and not asking what if, then this notion of not being able to imagine that an impact to the business could happen, I think is heightened. So that's our number one sort of underlying practice that we see in these organizations. The second thing is that they see the world through a systemic lens. and they see the connections and the interdependencies within their business ecosystem. So I think so many organizations look at things as within their own organization or even within silos of their own organization. And they tend to look at impacts at part of the system and very rarely at the whole of the system. What I mean by that is that the way that we think about systems and connected impacts is looking across what we call the 5 capitals. So there's human capital, social capital, there's built capital, so things like critical infrastructure, and then there's natural capital, the environment around us, and then there's financial capital. And those 5 capitals make up the system in which we live. And if we think about resilience, we need to look at it through all 5 of those. So if there's going to be a disruption or an impact now or in the future on the business, we need to look at the financial impact, the operational impact, the reputational impact, the social impact around us, but also the impact on people. And one of the things that we see obviously with COVID is the impact on well-being. Yet many organizations will only look at maybe the financial impact or the operational impact when they're looking at risk and thinking about business continuity, rather than a holistic view of the 5 capitals. That was certainly a big differentiator. And what for us this made a difference in those organizations from a leadership perspective is that resilience was part of a social contract for those organizations. There was an obligation that they were going to reduce the impact across those 5 capitals on their stakeholders. And that was part of their being, part of their purpose, part of their reason for operating. So that was the second one. The third one is a significant departure, I think, from some of the previous thinking about this. The organizations that we spoke to that we think had higher levels of maturity on resilience had a real focus on the essential outcomes they were trying to deliver. Now, I'll just explain this with a simple example, and we put this in the paper. Example of drilling and drills and the process of drilling a hole. So there's this quote that says, people don't want a 1/4-inch drill, they want a 1/4-inch hole. I think when we look at a lot of business continuity crisis management approaches, we focus on the recovery of the asset. So let's take that with that drill example. The drill breaks, the focus is how do we get the drill working again, or how do we get back to the process of drilling the holes, where these resilient organizations were saying, actually, is there a different way to make a hole? And actually, is there a better way to make a hole? What alternatives and options do we have? So rather than the focus on the recovery of the asset or the robustness of our process, they were looking at the alternative ways we can deliver the essential outcome regardless of the nature of the threat that they face. And I think that's really different way of thinking to some of our more traditional approaches. Once they've done that, the fourth thing is that they define the impact thresholds. What we mean by that is once you know what your essential outcomes are, what it is you need to deliver, even in a disruption, we can start to ask questions about what's an acceptable level of disruption to that essential outcome. So is it okay, for example, if our essential outcome for a bank might be to enable you to do a credit card payment, and if you go to any shop or a petrol station and the credit card system is down, you can't pay for your goods and services, is that okay for an hour? Is it okay for 2 hours? What about half a day? What about 1 day? What about 2 days? What about a week? And if we think about that and extrapolate that to other situations, like for us as a university, if our essential outcome is teaching, when COVID hit, what's an acceptable level of teaching that we need to do? What's the acceptable level of delay before we find an alternative, maybe to do online teaching? So really understanding what's the tolerable level and what's our thresholds was something that these organizations did, and they made it measurable. And I think this is very different to a risk appetite. Risk appetite says, look at the consequence, look at the probability of a risk. And then we ask questions like, it's high, medium, low appetite for it. An impact threshold is a measurable number where we're saying we are going to deliver to this number. And it's usually in terms of time or money or impact as a measurable number. So that was the fourth one. The fifth one links to some of the previous work that I did around resilience. And this is about balancing choices. So we know what the outcome is we want to deliver. We know our impact thresholds. We now look at the system from end to end to say, how do we deliver that? And if we can't remain within our impact thresholds, what we need to do is build more resilience into the system. But the choices that we have to do that are often constrained by our views of what resilience is. And for us, there's 4 ways to build resilience into a system, not just one way. And all too often we see only one way of organizations building resilience. The one way that most organizations try to build more resilience into their system to deliver their outcomes is put more controls in place, more system, more process, more regulation, more backups, more compliance. That's only one way to build resilience. What about building more flexibility into the delivery of that outcome? How might we build in options and alternatives for the delivery? So that second way is to actually build flexibility and responsiveness into our processes. Our third way is to say, hold on, we've actually got the right process here. It's about optimizing it. It's just doing it better and better. So it's about performance optimization. And the fourth way is that we really fundamentally question, is there a better way to do this essential outcome? And that's where resilience becomes more progressive and not only defensive, because it's saying in the future, to be fit for the future, is there a better way to deliver this outcome? Is there a newer way to do this? And what's the requirement 5-10 years from now to deliver this outcome? So there are 4 ways to think about building resilience: put more preventative control, put more responsiveness, optimize the system, or innovate and do a regeneration of the system. The 6th one here that these organizations did is constantly stress test the system. So once we know our outcomes, we've got the process, we built the resilience, how do we know it works? They stress test it in 2 ways. One is through running severe but plausible scenarios to test the system, in very much the same way that many of us will do kind of crisis exercises. But one of the different ways that these organizations stress tested is to say, let's not worry too much about the nature of the threat. Does it really matter if it's a hurricane, a flood, a terrorist incident, or anything else that can disrupt us? What we really need to know is, if we are disrupted, then how do we respond and how resilient is our system? So what they tended to do was do scenarios around a set of business assumptions. So for example, can you deliver your core essential outcomes if 20% of your staff can't work for whatever reason? What if it's 30%? What if it's 40%? Can you deliver your essential outcomes if you can't access these buildings? Or if you can't, if your supply chain is disrupted, can you still deliver the essential service? And in doing that, we start to stress test the thresholds, but in a more risk agnostic way. And I think one of the advantages of this was summarized by one of our respondents who said, the big breakthrough for us is when we stopped playing hurricanes. And what he meant by that was, as soon as you get people in the room and you say, we're going to run the hurricane scenario, the flood scenario, the terrorist event scenario, what people tend to do then is say, it's so low probability that they switch off and they're not engaged in the process, or they start bringing a lot of detail about what a hurricane might entail, and the detail obscures the fact that they're actually looking at how resilient the system is. Can they deliver their essential outcomes under disruption? So that was a big difference. And then underpinning all of this is the notion of leadership. And what we found again was that people didn't talk to us about who the leaders were, or the nature or characteristics of leaders. They talked about the practice of leadership, and they talked about 3 aspects of this. The first one is that the resilience program had a strong sense of direction and purpose. So direction, it was aligned across systems and processes and silos. So it was alignment, and then there was a strong commitment from the board to people at the coalface to the resilience effort. So the 3 leadership practices of direction, alignment, and commitment came through very strongly in the work. If we could just go to the next slide. So these are just some of the additional slides that we put on here just to reiterate a couple of these points. So I'm not going to go through this in any great detail, but this was the point that I made about really understanding the nature of the system, the 5 capitals that make up our system, and the associated impacts across those 5 capitals. And I think when we think about disruptions now and disruptions in the future, we really need to be thinking from a very systemic perspective across these 5 capitals. And the next one is this. Could I have the next slide? Yeah, and this is the visual representation of the choices that I suggested. So the bottom left box being we add more controls into the organization. The problem with doing that approach is that if we put more and more controls in the system, what we tend to do is drive out the adaptive capacity of the organization. We cross that threshold, we stagnate the organization. Also, then the bottom right idea, the bottom right box here is about building more responsiveness. But if we build too much responsiveness, we end up with a fragmented organization, lots of people doing lots of different things. If we go top left and we think about what we're trying to do here is to optimize our system by doing what we've always done better and better, what we can tend to do is drive for efficiency gain and optimization, and it can remove some of the waste that's really needed in the system, and we create a very brittle organization, and we remove some of that buffering capacity and redundancy and slack in the system. And of course, if we go to the top right box and put too much innovation in, what we tend to do then is have a disordered system. And you can see this in, say, Uber as an example of an organization that is very innovative, but there's been so many legal disputes around its operation because it doesn't have the governance processes. So the idea here is that you've got to find a fit for purpose approach that works for your organization. And there's always a balance, and that balance and shape shifts for different organizations. It might be something that you want to consider. What's the right balance for your own organizations? Have you got that balance right now? And have you got that balance right in the future? And that's something that we work with a lot of organizations on. And I think the last one is the maturity model. So what we've done is put in the report a maturity model, 5-step maturity model from ad hoc to generative. And the idea here is that you might look at these points and say, where are we on our journey? And I think for all organizations, we can look at what's the next step that we need to take in terms of our organizational development. And we can self-assess. And it may well be also that different parts of your own organizations are at different levels. So how do we move the whole organization on? How do we move on different parts of the business? So we move more towards a generative approach to resilience. I think that's all of the slides and the things that I wanted to say. This is just the summary of what I've said already in terms of recommendations for organizations. I think there's also recommendations for government here in terms of enhancing some access to risk information, hazard information, foresight techniques, which I don't think all organizations are fully employing or optimizing. I think there is also a need for policy to think across these 5 capitals with a more integrated approach. And I think one of the things that we saw in financial services that made such a difference is that the regulators opened a conversation. And they opened a conversation to ask organizations, how do you assure yourselves that you are resilient? And crucially, they also asked the question, what contribution does your organization make to the resilience of the whole sector that you are in? And I think those are 2 fantastic questions to finish with, and maybe for you to reflect on.
Definitely. Okay, so we're coming on to the questions and answers. I haven't seen any come through, so if you have sent some and I'm not seeing it, I can only apologise. Please use the chat to do it instead. But I do have a couple myself. As you saw at the start, we're working on emerging risk at the moment as a SIG. So we have a working group that's looked at how to identify it, how to tackle it. And I have to say, when I read your publication, I started, my little brain started whirring and thinking, actually, there are bits in here that will work better in terms of ways of tackling emerging risks than, for example, ISO 31000, which is kind of at the heart of what most people within risk management do. Have you had occasions to work with other organisations using this basis for emerging risks? Does anything kind of come to mind about the usefulness, the cross fertilisation, I suppose you call it?
So I'll make a start, David. I think the two things are quite interlinked, as you say, and there's work going on as well within the British standards community right now about building a standard on emerging risk, which is taking interesting shape. And within that standard, certainly we're looking at the role resilience plays in dealing with emerging risk. What I do think here is following the practices that are set out in the paper that David's underlined there, gives you a way perhaps of dealing with emerging risks without necessarily having all of the understanding of the risk, because what you're doing is trying to become a little bit more risk agnostic and saying, do we have the resilience in the system, in the way we operate our business model to withstand disruptions wherever they may come from? And some of the stress testing that they've talked about is about going through different aspects of your business model and the way you operate and saying, what if this failed, or what if that failed, irrespective of what the risk is that may have caused that failure. And to understand then, so what are our resilience capabilities that come into play that would help us deliver the outcomes we've set out to achieve, the essential outcomes that he said, within the impact thresholds that we've set. What are the resilience capabilities we have that enable us to do that? And usually in those stress tests, if you have a resilience capability, but it's only one, recover the process, or we've got one option, you may decide that actually isn't sufficient, because the next question I would normally ask in a stress test is, what if that didn't work? Have we got another alternative? So for resilience capability, you're looking to build up a sort of layering of resilience capabilities that can support each other or kick in one after another. So I think there is, to answer your question, Alison, there's certainly, using the thinking that's in this paper will help you build a more agnostic, if you like, approach to resilience, which will then better support some of the emerging risks that come along that you don't fully understand yet.
Exactly. And also I think David said earlier about, we're going to talk hurricanes today, and everybody starts focusing on, well, we don't really get hurricanes here. And I think conversations I've had in the past with organisations around emerging risks very much go down that route. It's not going to happen to me. I think you mentioned that one earlier as well. It's not going to happen. The one that worries me the most is the internet going down. And I know I'm going off at a slight tangent, but you imagine we couldn't be doing this today. We couldn't be keeping our organisation core missions alive in the way that we've managed to in the current pandemic. That to me is the terrifying one.
And you're right to sort of point to that. And I think the interesting thing with the internet is the internet itself is highly resilient by its design. It has infinite flexibility and options in the routing it can take. Probably the bigger challenge is sometimes the access providers to the internet. So that's your British Telecom, your Vodafone, etc. They've been remarkably resilient through COVID. They've done extremely well. But it's interesting. We can learn from some of the lessons about the internet itself. I think in terms of resilience, because it has a high degree of flexibility within it.
Yeah, just a couple of things to pick up on that question. And then I noticed we've got another question in the chat, so I might pick that one up as well. But for me, there's two interlinked but kind of separate activities. You know, there's a whole piece of work around risk analysis, and actually there was a government call for evidence on risk analysis, and it was talking about emerging risk and compound risk and systemic risk and cascading risks and all of this stuff, and really understanding risks better. For me, you know, being the academic, that's quite an academic exercise to understand the risks better. And I think what we're talking about here is exactly what Rick said, is about how do you manage in a risk agnostic way, how do you build more resilience into the system regardless of the impact. It's not that we say you do this and that risk analysis part isn't important. It's a both and argument. It's about saying, you know, we can do both of these. But I think one of the challenges I think that this community has had, the risk management community has had, is really conveying to a senior leadership team the importance of risk and resilience and to get the necessary investment in it. And if it's seen as a technical exercise and it's about probability and consequence, and the senior team actually focus more on probability and say it's not going to happen, so we're not going to invest, then we don't move it forward. Whereas this is actually asking a set of strategic questions about what is the organization trying to do? What is it trying to deliver in terms of outcomes? What is it setting up to do? What's its purpose? What does it need to deliver to its core stakeholders? How do we deliver that from end to end? It's actually a set of more strategic questions and strategic choices. And I think it puts it much more on the agenda. So my experience has been, I've been doing this work for like 20 years in this field. I used to have a lot of conversations with people who were in risk departments. I'm having a lot more conversations in the last few years with boards and senior management teams that are taking an interest in this. And I think that resilience perspective helps. There's a question about cost and funding requirements for these activities. It's a great question. I mean, this is one of the fundamental questions that is a real challenge, isn't it? Because it's a bit like an insurance policy. You know, you're asking for an investment in something that hasn't yet happened. And if we'd have gone back pre-COVID and said to the government, do you want to invest in a whole set of warehouses to host ventilators and PPE, you probably would never have got that level of investment. And that's again because of that probability thinking. I think in the report, we talk about some different choices an organization has. You know, you can think about the difference between the resilient as you want to be and as the resilient as you can be. And I think they're two different things. And I think that how resilient we can be is never going to be an achievable thing that we want to invest in. It's always a choice. It's always a managerial and leadership choice. The key thing for me that is different in terms of the conversation is the conversation around impact tolerances, which is one of our practices. If you're having a conversation with the senior team about, do you want to invest in this? What's your appetite for risk? It's kind of intangible. It's quite gray. If you're having a conversation about, this is the outcome that you want to deliver, here's your impact tolerances, we can't stay within that impact tolerance. You know, if we are disrupted, we cannot deliver this essential outcome to our stakeholders. That's a very different conversation about the investment required to deliver it. The other thing that I've noticed in these conversations with this approach is that if we really understand the outcomes, we understand what's essential, we also understand that some things aren't as essential, so it helps prioritization. And mapping processes from end to end and surface to core, what it often does is it actually optimizes those systems and makes them better. So actually there can be improvements in service delivery in using this approach. So not only are we increasing resilience, we're actually improving delivery and often can actually reduce cost because we've actually got a better process in place. So I think it's just a different set of conversations. Rick, if you want to come in.
Yeah, just 2 or 3 additional observations around it. I think One interesting one, when you look at the World Economic Forum's risk report this year, is for the first time they moved to reporting risk by impact rather than just by impact versus probability or likelihood. And I think that is something that we need to look at, because quite often, and particularly when you get into emerging risks, the reality is we do not necessarily know the likelihood. There isn't enough evidence to support it. The reality is that quite often these high impact events have been reduced to low probability, which takes, as you say, the focus away from them, when actually we absolutely need to focus on them, because they are the things that are really going to harm us and hurt us. And indeed, you know, when you think about a pandemic, you can argue that it had a probability of 100%, right? It was certain to happen. There was a when, not if. And to say that, okay, we'll go to likelihood and it's a 1 in 80 year event, the problem is that 1 in 80 years could be tomorrow. So sometimes I think the language that's used in risk management, this sort of analysis, defocuses those sort of really high impact events. So that's an interesting perspective from the web. The second bit is on emerging or on risks. You know, I use a sort of Donald Rumsfeld analogy of known, etc. So there are risks. We know what the risk is all about, and we know what the consequences of that risk are really well. Majority of risks, we probably know what they are, but we have actually not a well-developed understanding of the consequences. They're a bit more unknown. The connected impacts that are in the report will help extend and expand our understanding of the likely impacts of that risk materializing. But then there are also the unknown unknowns, which we can't predict. Again, by taking a slightly more agnostic approach to risk in terms of how we build resilience, we're better able to deal with the sort of known unknowns and the unknown unknowns. But it doesn't mean that we shouldn't, analyze risks, understand it, because there will be some specifics about risks, which when we do understand them, we'll be able to be quite targeted about some of the aspects of resilience we build as a result of that. So it's not saying we shouldn't understand risk. Absolutely, we should. But we shouldn't rely on our resilience to be very risk specific all the time. We need to be more generic. The final one, just your example on the impact thresholds. I used an example of you're a water utility and there's a disruption of supply of water to householders. So they may say, well, our essential outcome is we have to provide drinkable water to householders, and they would find they've got alternative options of providing drinkable water. They could provide a tanker to the streets and you get it. They could send bottles of water in and you can collect them, for example. So the question about the impact thresholds is say, okay, we've got an alternative way of getting water to householders. It's not nearly as good as it coming through the tap, but it gets water to householders. But for how long is that alternative tolerable? Is that acceptable to continue in that way for a day, for 2 days, 4 days? What about vulnerable people? Are those, is that an area we need to particularly focus on? So the impact thresholds is about understanding that aspect. Okay, so that's the really important aspect.
And the cost involved there as well, Rick.
Yes.
If you've got to buy in bottled water as opposed to rely on the architecture that you've already got in place.
Absolutely. So how long can we withstand that financially and the cost involved in doing that, et cetera, yeah. So.
I think there's another question. Can you see that one?
There's a question there. Do you want me to take that? I've just seen it. It's about within a sector, how do we drive this within a sector? Can it be anti-competitive? That's a really good question, and it's really interesting. I was just reflecting on that when I saw the question. Again, when I was doing work on this in this area like 15, 20 years ago, and particularly in kind of more of a safety context, I used to hear all the time organizations saying things like, we don't compete on safety. It's, it's something, there's a social good element here. Or, I think resilience, I'd like to think there was a moral imperative, and I talked a bit about a social agenda here and a social contract about resilience. But what I have actually seen is there's also a degree of competition around resilience now and competitive advantage that can be delivered by resilience. So, for example, if you are a bank and you've got that credit card example that I talked about earlier, if you're a bank and you say that our impact tolerance level's 1 day, and then another bank says it's 2 days, you are actually competing on your level of resilience. And I think that's quite an interesting perspective. I think there are ways that we can move to more, you know, in the literature we talk about a co-opetition model. It's not competition and it's not collaboration. And actually, you know, around things like sharing risk information might be an area where we move more to a collaborative model. I think it's challenging. I think one of the real challenges that we see, and I think this does come down to leadership mindset as well, to be honest, like what we've seen absolutely with COVID is that COVID has been a threat that's exploited the interdependencies in the systems that we've got. The tightly coupled nature, the interdependencies. So you've got something that can start in a market in Wuhan in China, quickly cascades throughout the world, affecting every sector and every organization. A lot of threats exploit the gaps between the interfaces between systems and processes, between technologies and people, between organizations, between silos in organizations. While ever we think about our management of risk in a more siloed way, I think we're going to struggle to deal with some of these more interconnected threats. So I think we do have to move to a more collaborative approach. I think that requires, you know, leadership to look beyond just their own organizations, to look at the whole system. I love that question that was posed in financial services in a 2017 discussion paper that really asked that question, because of course if you've got a cyber attack on a bank, one bank goes down, all of the banks are interconnected in terms of their technologies and their systems and processes. So we have got to start to look at the whole system. So I like the idea of regulators driving that conversation, but I think it requires leaders to look beyond their own organizations as well.
And then I think it's worth saying that actually in the financial sector, there is an interesting set of activities all now underway. And you know, the regulators did spearhead it to an extent with the discussion paper and now supervisory statements they've just produced. But they have actively encouraged through UK Finance, which is the industry body, collaboration across the industry. And there are working groups now established to look at the operational resilience and how they approach it within sort of the banking sector, the insurance sector, the asset management sector, etc. This is being actively encouraged by the regulators. It's been sponsored by the Bank of England. It's being led by the industry body. So the whole point about this is to try and get a common understanding and approach to dealing with resilience, but also to share and understand where are the common points of failure within the sector that also need to be addressed, where no one firm can address it on their own, but it actually needs that collaborative action. So I think that sector is understanding the problem and is potentially setting out in the right way to start to really deal with it.
I have to say the charity sector is usually pretty good at collaborating. Yes, there is competition in terms of bidding for contracts with some charities, not all. But certainly when we were looking at emerging risks, if the time that you need to invest in terms of researching those risks, if that could be spread amongst different organisations within the sector, I've always felt that work would be more achievable because you're not making each individual organisation do the same job in effect. So I can totally see how that would work within the sector and also on the emerging risks side as well. And I like the thought of kind of extending that out further into, yeah, you're right. We are very good in the risk fraternity at estimating whether it's a high impact, low severity, high impact, low frequency, etc. But that's the first part. The big part is, and really what can you do about it? You know, what's the action you can take to resolve it? I can see another one about stakeholders. Can you see that one question? The challenge for charities is that we have two sets of customer stakeholders, beneficiaries and donors. So they're kind of, charities are hit in both directions. I realise donors are similar to shareholders, but not actually the same. EOs are not the same, and this has been a big tension during COVID. Any suggestions on how you approach different expectations, different stakeholder groups, I guess?
Yeah, I agree that different stakeholders have different essential outcomes. I think if you map out the full range of essential outcomes across the 5 capitals, so what are your essential financial outcomes, what are your essential operational, human, social, and so on, you can come up with a set of essential outcomes. You then have to make a decision about, are all of those essential? What are the ones that we really must deliver? What must we deliver even in a disruption? And I agree that those things are conflicting. So you might have something that, and you get this in any organization, a commercial organization, your financial ones might be conflicting with maybe your social and your human ones or your operational ones. But that's about prioritization. That's about making some strategic choices around what is essential and opening that conversation about what we must deliver. So yeah, I agree, but I think if you do that in a systematic way and look across the 5 capitals, you can work out a set of outcomes that you need to deliver to all stakeholders.
Before you even, oh, sorry, go ahead, Rick.
Yeah, I was going to say, I think some of the pharmaceutical companies through COVID have had these sort of direct conflicts in terms of the vaccine, the need to get this out to the world at large versus getting it to the countries that can afford to pay for it and have signed big contracts. And they've had to try and manage that sort of conflict and that tension that's inherent in the system that we live in. And, it's always going to be a challenge, but they've done it by trying to set out sensible principles that they're operating within. And that's the way they try to manage it, and they've designed that up front.
Yeah,
I think it's also I'd refer that person to our the SIG Stakeholder publication as well, because in there it will help you kind of group stakeholders into how they will impact the outcomes as well. So I think I'd start with that, doing your stakeholder mapping and understanding the influence that they have on you, and then move to what we've just been discussing.
Yeah. In the report, there's a table, and I can't remember exactly which page it's on, but it talks about the 5 capitals and gives us an example of essential outcomes that might need to be delivered to different stakeholders. Actually, once you've done that stakeholder mapping, then completing that table would actually create quite a systematic approach to doing that. There's one question there, might be a question to pick up just before we finish. I know we've already got 5 minutes, but it's a really good one about because we've managed our way through the pandemic, what could be worse than that? Hasn't that demonstrated resilience? So why do we need to bother? I think that's really interesting. Again, I think that's a leadership mindset issue. And we've had in the interviews, we had quite a different set of views on this. I did come across this view, and also like the resilience fatigue kind of question about, we've done so much resilience or thought so much about this, do we get tired of it? I think a couple of things I would say is that a lot of what we're saying is what we need to do before an event. Actually managing the crisis, this stuff is the stuff that you need to do before. And I can't believe that there's an organization out there that if they hadn't have actually done some of this, wouldn't have actually responded better in the crisis. I think the other point to point out would be, what if the next crisis there's not a government bailout, and if we didn't have a furlough scheme, how resilient would those organizations have been? And how much can the government bail out in the future against an event? And then the third thing I would say to this point is, and it was actually brought up by a couple of our interviewees, very senior leaders, that said, we actually view this as our practice run, because there could be bigger threats in the future. And if we look at things like climate change, if we don't deal with that, then a pandemic is only going to be like just our opportunity to get better at this stuff. And I'll give you another example, another thought as well. I work with one global broadcasting organization in the last 6 months. I'm not going to name who they are, but they're a big household name. And I was asked to go in and do a piece of consultancy for them, which was to map their COVID response. So we spoke to every member of the senior management team and all of the people that have been involved, and their mindset was that we need to learn our lessons from this now, not in 2 or 3 years' time, because the opportunity and the window to learn is right now, and there's an appetite to do that. So we work with them. Actually, it was like 6 months ago, so in the midst of the crisis, to map their response in real time, which is very different to a lot of organizations which I don't even think are asking the question, what have we learned from our response to COVID yet?
And I would add, David, remember, building resilience is about ultimately reducing impacts when risks do materialize. And I think quite arguably we would say that we didn't as a country have sufficient resilience when COVID-19 first hit us, and even second time hit us, because the impacts that we had were not tolerable. They were above where we as society would expect them to have been. If we'd had more resilience, we'd been better prepared, we'd have probably managed the impacts within a more tolerable level and better. The second thing is, yes, we've had a pandemic. For some organizations, it's been hugely challenging and hugely stressful. For some other organizations, actually, it's been comparatively easy once they understood they can move from offices to working from home and still deliver the outcomes. There will be other events for those organizations, maybe like cyber ransomware attacks and things like that, which would be far more challenging for them to deal with. So there is a danger if complacency builds in to organizations generally on this.
Great. I think we're pretty much at time, and I don't think there's any questions that I've missed. Have you seen any? No? Then I'm just going to say enormous thanks. I can't believe how quickly you confirmed that you'd participate in this. So real thanks, and once again to everyone on the call, please read this. It's really good, and it's logical, and it's practical. It isn't, excuse me, David, it isn't academic theory, it's practice. So, okay, thank you very much. Thank you. Goodbye.
Thank you.